What's up, Cash Flow Nation? Today we kick off our rapid review series and take a look at Bank of America, ticker BAC. Stick around until the end to get the new scorecard summary when we wrap things up. We're going to move really fast, so turn those captions on and pause or rewind if needed. Time is money, so let's get moving. Bank of America is currently $45.90 a share with a 48% total return over the last 12 months and 597% over the last 10 years. Absolutely obliterating the S&P 500. And believe it or not, almost all analysts still rate it as an undervalued buy. But you know me, I only trust me. So let's take a fast look at my 10 critical metrics for stock analysis. See you on the other side. You know we're all about dividends here, so let's hit that first. Bank of America currently has a yield of 1.85% and pays quarterly, supported by a very sustainable 21.9% payout ratio. It's paid dividends for 22 consecutive years and has increased its payout for the last 8 years. And big time bonus, it has a 5-year dividend growth rate of 25.5%. I literally have nothing bad to say here. Their PE ratio sits at 12.86 and has averaged around 14 for the last 5 years. The financial sector as a whole sits around 10.5, and I'm pretty happy with BAC's ratio. 5-year return on investment capital, or ROIC, is 3.5%, and although it beats out some competitors like Citibank, it is below the sector average of 6.3%. I like to see companies with an ROIC above 8%, to be honest, but financials generally are lower and it doesn't throw off any red flags. Total revenue has an upward trend over the last 5 years, climbing 12% from $83 to $94 billion. This shows a great positive trend and is a potential indicator of future increases. Profit growth, which I consider an extremely important metric, looks very solid for Bank of America. It's grown an average of 29% per year over the last 5 years and 34% over the last reporting period. This is extremely solid. A growing company is an attractive company. Outstanding shares have decreased from 10 billion in 2016 to just over 8 billion at the end of 2021, further solidifying BAC's commitment to share buybacks. And of course, we as investors love some share buybacks. One metric I always use and you can't find on any stock sites is the ratio of long-term liabilities to free cash flow. I consider any ratio under 5 as an indication of a top-tier balance sheet. BAC's 8.78 doesn't excite me by any means, but it also doesn't scare me off. Free cash flow itself has grown by 122% over the last 5-year period and looks just about as solid as they come, especially in the last 3 years. Yet another strong positive sign for BAC's future outlook. Another metric not listed on any sites is price to free cash flow ratio. I like it under 20 in most cases. There is always exceptions to every rule, but this is a good place to start. Bank of America comes in at 13.1, and this makes me a happy investor. Now, on to the scorecard. Taking the 10 metrics and awarding 0 to 2 points for each one, we get a score between 0 and 20. It gives me a great first look to see if I want to dig in a little deeper. Bank of America gets 2 points for its dividend growth rate, 2 points for its dividend consistency and payout ratio, and 1 point for PE ratio, losing a point there because of its relatively high number compared to sector averages. It gets 1 point for 5-year return on capital investment, as it's slightly higher than I like to see, and 2 points for its positive revenue trend. BAC tacks on another 2 points for its stellar profit growth and 2 for its consistent share buybacks. Long-term liabilities to free cash flow rating gets 1 point for a middling score of 8.78, and free cash flow of 122% over the last 5 years earns it another 2 points. And we wrap up our score with 2 points for a great price to free cash flow ratio of 13.1. Bank of America ends up with 17 out of 20 points and definitely earns a closer look. If today's video helped you out in any way, pop that like button and subscribe to join the Cash Flow Nation. I'd also love it if you dropped a comment below and let me know what you thought about the new rapid review format. Thanks, and see you next time.